Take a look, traders. Here on these three charts, I spotted three of the most powerful candlestick pattern formations. In this video, I will teach you these patterns. I will teach you how to recognize them, how to read them, and I will share with you very useful tips. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first candlestick pattern formation that we'll discuss is called the inside bar. And that pattern is spotted here on dollar CAD pair on a daily time frame. And this pattern consists of two very important elements. The first element is a strong candle. It can be either a bullish or bearish candle with a relatively wide range. And the point is that such a candle is called the mother's bar. And the next candles are trading within the range of that mother's bar. What do I mean by the range? I mean the high of the candle and the low of the candle. And you can see that for the next 3 days, the market was perfectly respecting the boundaries of the mother's bar. You can see that even though we got the breakout attempts of that, you can see that all the candles closed within its boundaries. And that pattern is the classic indecision pattern. And once it is formed, it means that the market is coiling, it is weak, and it is indecisive. And what we are looking for when we spot that pattern, we are looking for the breakout of the range of the mother's bar, either to the upside or to the downside. You can see that at the moment the strong bearish candle is breaking the range of the mother's bar to the downside. Once the candle closes below the range of the mother's bar, it gives us a very bearish clue, and with a very high probability then the price will keep falling. If the price, however, respects the range of the mother's bar and breaks its range to the upside, then we expect a bullish continuation.
Hey guys, subscribe to my free Telegram channel. Get exclusive forecasts and signals daily. Get exclusive educational material and tips. It is called Vasily Trader. The link in the description below. Subscribe now and let's continue.
This week I spotted a very cute inside bar formation on a peon Swiss pair. Here on the 4-hour time frame, you can see that the price formed a very strong bearish candle. And if we underline the range of that candle, we can see that it was the mother's bar. And you can see that then many 4-hour candles were coiling within the range of the mother's bar. And then you can see that the mother's bar range was finally broken to the upside. This candle closed above that, and it was a very bullish trigger. And then the market kept growing. Now a couple of tips about the inside bar formation. The pattern works phenomenally well if you trade it from key levels. You can see that opening a daily time frame and looking left at structure, that candlestick pattern formation was formed on a key level. So your task is to patiently wait for the test of a key level first. And only when you see that pattern on the key level, only then you can trade. You can see that here on peon Swiss we got a very strong resistance that the price reached. And again, the inside bar formation here was formed. Here was our mother's bar. Let me underline its range for you. Here it goes. Here was our mother's bar, and you can see that many daily candles were perfectly respecting its range. But then its lower boundary was finally broken, and it gave us a very strong bearish signal. The second most powerful candlestick pattern formation that we'll discuss is called the Engulfing Candle. And here on a dollar Swiss chart on a daily time frame, I see a very nice example of a bearish engulfing candle. Take a look at that bearish candle, traders. What is important to note about that candle is that that bearish candle completely engulfed the range of that bullish candle. Let's underline that together. Here is the high of that candle, and here is the low of that candle. And you can see that the body of that candle closed below the range of that candle. And bearish engulfing candle tells us that we see a strong bearish pressure. And usually we see such formations on key levels. For example, over here, we have a very strong resistance. And you can see that approaching that structure, the price formed that candle. It tells us that selling pressure from that resistance was extremely strong. And most of the time, such a formation indicates a highly probable bearish continuation to lower levels. One more tip here about the engulfing candle. When you spot a bearish engulfing candle, open the volumes. And once you spotted the pattern, check the volumes. You should also see the volume spike. If you see that, it increases the probabilities that the market will keep falling then. Now let's discuss the bullish engulfing candle. Take a look, traders. Here we got a very strong resistance on gold, and that resistance was broken to the upside. And after the breakout, this structure turned into a very strong support, and you can see that the price retested that with this quite strong bearish candle. But then take a look at that bullish candle. That bullish candle completely engulfed the range of that bearish candle and closed above that. Here we have a perfect example of the bullish engulfing candle. And you can see that after that candlestick pattern formation was formed, gold bounced nicely and went much higher. Now let's check the volumes. Watching the volumes, traders, you can see that also right here we got a volume spike. That is a very important extra clue. Then watching how the price was reacting to that resistance, you can see that the price here formed a bearish engulfing candle. You can see that this strong bearish candle engulfed the range of that bullish candle. And we also got the volume spike there. And you can see that then gold dropped sharply. Engulfing candle is a very powerful candlestick pattern formation. And being formed on key levels, it gives very accurate signals. The third, the most powerful candlestick pattern formation that we'll discuss is called the rejection candle. And here on silver, on a daily time frame, I see a perfect example of the rejection candle. Here I'm talking about that bearish candle. Why that bearish candle here is so important? That candle has a relatively wide body. But what is more important about that candle is that the wick of that candle is bigger than the body of that candle. That candle right here is called the rejection candle. And rejection candle is used to validate the importance of structure. Take a look here on the left. We got a very strong resistance, right? That was respected many times in a row in the past. And once the market reached that, we were rejected. That wick right here means that the market was rejected from that. Just try to get what was happening with the price. We were growing. The price formed this bullish candle and closed right here. Then this candle opened and we bounced and we reached that resistance. But once it was touched, sellers started to push heavily and the market dropped and we closed over here. Usually such a candle, first of all, tells you that the structure that you spotted is very strong, but moreover, with a very high probability, a strong bearish movement follows then. On silver, we spotted the rejection from the upside. And here on dollar index on a 4-hour time frame, I spotted for you the rejection candle with the rejection from the downside. Here, looking left at structure, you can see that we got a very strong structure resistance right here that turned into support after a breakout. And recently, the market was testing that structure. And take a look what happened. We were falling. We were falling sharply. And once that support was reached, we bounced. And you can see that that candle right here has quite small body but a very wide wick. That wick over here tells us about a very strong bullish pressure from that support, and it tells us that that structure will most likely hold. And you can see that then we got a very nice bullish continuation. Very important tip about the rejection candle is that the point of rejection should match with the key level. If the point of rejection is some random point, most of the time that pattern won't work. But if the rejection point is lying on the key level, it gives you a very accurate signal. Alright, traders, so these three candlestick pattern formations are very accurate, and I really want you to try them, and I really want you to learn to recognize them. Let me know, by the way, in the comment section which is your favorite candlestick pattern formation. Also, let me know in the comment section if you have any questions. Also, traders, for more education, for more tips, don't forget to subscribe to my Telegram channel, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.